The second largest economy, China, led to a global free fall in stocks, with India too taking a severe beating. The Sensex and Nifty collapsed to a 10-month low, and the Rupee hit a fresh 2-year low. The Sensex fell 1,624 points to settle at 25,741. The Nifty fell 491 points to shut shop at 7,809. While accepting external forces were the primary reason, Finance Minister Arun Jaitley said government and Reserve Bank of India are keeping a close eye on the situation.
I have not the least doubt that this turbulence is transient and temporary in nature. The markets will settle down. All concerned authorities, the Government of India, the Reserve Bank, are watching the situation very closely.
RBI Governor Raghuram Rajan said the central bank will have no hesitation in using foreign exchange reserves to reduce volatility in the currency market. The massive stock market fall and the recent devaluation of the yuan brought the rupee to a 2-year low.
Now, many of you are watching markets this morning worried about the continued volatility from last week. While I don't want to opine on the future direction of markets, I will say that relative to other countries, India is in a good position, with strengthening growth, a low current account deficit, a narrowing fiscal deficit, moderating inflation, low short-term foreign currency liabilities, and very sizable exchange reserves relative to imports or liabilities. So we have approximately $380 billion in reserves to be used as and when the need arises.
The reasons for this meltdown are slowdown in China. The Chinese markets fell 9%, with about 80% of the companies ceasing to trade after breaking the 10% filter level. Manufacturing data had hit a 77-month low, and low demand had put pressure on commodities. The Chinese debt burden is 200%, and $547 billion was released from the pension fund into the stock markets. But the woes continue. Pressure on U.S. markets. Anticipating a Fed rate hike in September, U.S. markets saw a huge sell-off, the biggest since 2011. Plunging oil prices and the fall in demand from China has seen American crude prices hitting a 6.5-year low. Sell-off from FIIs. The falling rupee has made FIIs pull out 3,500 crore rupees in the last 3 sessions, a similar reason why they had pulled out of China, since asset values decline with the fall in the value of the currency. But many contrarian analysts look at big falls such as these as opportunities to make good value buys. Less than 2% of the people invest in stock markets. Hence the impact is often exaggerated, while the real economy's fundamentals remain strong. Business Desk, DD News.